Peter Grauer is a force to be reckoned with for diversity inside Bloomberg. And then we have two senior bankers who just happen to be women and very passionate about diversity. Anne Finucane, who is a vice chair at Bank of America, and Dina Powell, who's in the management committee at Goldman Sachs, has been there for over a decade, except for a brief stint as a deputy national security advisor to Donald Trump. Dina, can I just come to you? We all probably care about data. I mean, it's Davos. We're always introducing indices and numbers. It's great for the diversity debate, particularly when it can show investors that more diverse companies do better. Mm-hmm. But sometimes the information is also about telling us how far we still have to go. And I was struck by, Citi's announcement last week that women across the company, the median earnings are 29% lower for women. What should any, and they could be just as bad for other banks, but what should a company like Citi do when presented with that hard data?
Well, I think data is key, and I think, frankly, not just measuring what you have, but measuring towards incentives. I mean, we at Goldman Sachs, it has been a huge priority of David Solomon to increase the number of women at every level, but particularly at the more senior levels. And I think one huge seismic change recently is that managers are actually graded on how many women on your team have advanced, and how many are you mentoring, and how many across your business are doing well. And so I think data is important, but then building incentives around what you're learning. In 2008, as you remember, we launched 10,000 Women, which was a global initiative to empower female entrepreneurs. And at that time, we actually had to track every single woman, because we're Goldman, and as we measure everything. But 80% of the graduates of the program increased revenues. 60% increased jobs, and these are all in emerging markets. But the number that was hardest to prove is how women then reinvest those dollars. What is the multiplier effect? And we actually were able to track that each of the women that graduated mentored at least 9 other women in the program. And so even those intangible things, you really have to find a way to drive measurement data, or you won't get the next round of investment.
And are you managing, are programs like that, and maybe also closer to home, actually getting more money into the hands of women, at an investment level? It
absolutely is. In this case, it was a combination of business, education, and capital in a major partnership, actually, with the World Bank, where we have a facility that's raised more than $1 billion, and it's targeted only for female entrepreneurs in developing countries. But here in the United States, we recently launched something called Launch with GS, which is a $500 million investment initiative that will invest in female-owned companies, but also female-owned funds. The numbers are just striking, as you and I were speaking earlier, Stephanie. Less than 2% of venture capital investment goes to female-owned enterprises, and they're less than 2% of all private equity firms are run by a woman. And so I was saying, we're on the right path, we're in the right direction, but we're not going fast enough in a number of these areas.
And I think, we're going to get to that, and I know that Anne also has strong views on this. But Peter, we had this great video, all these people saying how important it is and how vital data can be in this fight. But tell us a little bit about concretely how this index is going to be helping clients.
Well, as you both said, the world is crazy about data these days. And one of the reasons we built the GEI, and my colleague Kirsten Barnett, who should stand up. Kirsten, where are you? Kind of standing up, is really been the driving force behind it. But one of the things that, when we did the pilot a couple of years ago, was that when we looked across the ESG landscape, environmental, social, and governance data landscape, which has become an increasingly important determinant in how investment dollars flow, we noticed that there was nothing really focused on gender equality. And so we did a couple of pilots. This is the 3rd program that we've done, and really saw that there was a gap in the data needs of the marketplace, and this would be a way for us to fill that gap, create better transparency and better information as investors make decisions on the kind of companies that they want to have their dollars invested in going forward.
And what's the plan over time? It's going to get...
Well, I think we saw between the second and the 3rd year, we've basically seen a doubling of size. As you mentioned, a couple of the data points, 230 companies. That number was half that a year ago. We've seen this year Goldman Sachs joined us, Walmart joined us, Procter & Gamble joined us. I mean, we're getting some of the great companies of the world whose leadership fully acknowledge that this needs to be a way in which their stewardship is judged going forward. And so I think we're going to see it kind of growing almost exponentially, because after a while, executives running companies are going to find that they're being judged as much on these kind of metrics as they are on their profitability.
I mean, and that's the big question, is whether, we have over the years, whether it was corporate social responsibility or some of these other campaigns, things could be sort of nice to have sort of mentions in the annual report. We like to think that the diversity numbers and that these kind of indicators are going beyond that and are actually affecting people's behavior. But how much do you think it's really true when you look at your clients and Bank of America itself?
Well, I think it's true. I think you could use the financial crisis as a pretty good bellwether when there were fewer women in management in the financial services industry, less representation of women on the board. I mean, using ourselves as an example, 30% of our board women are diverse. 40% of the executive management team are women. Half the management team are women. Half the company are women. And two things, it allows you to, I think, say, hold on, can we just review that again? I think it just, any diversity allows for, I think, a breath in the room and the opportunity to revisit something. It's certainly true in our own businesses. I mean, we have, unlike Goldman, I mean, we have the investment bank, but we have a very large consumer bank. And that's, millions of small business owners, 40% of them are women. And the issues they have faced early on are a little different than men, and it has to do with access to capital. So I think that we're all very focused on making sure that we can get training, access to capital, and a good networking facility going, not only in our own companies, but I do think that we've made some changes. Dina and I were just talking. Goldman and Bank of America have created some partnerships that I don't think we would have created a few years ago, and I dare say I don't think the men would have created them.
Although we have to be a little bit careful about overpromising. I'm not sure, we can't necessarily say there'll be no more financial crises if you get women.
No, I'm not saying there won't be any, but I do think that the diversity of voices in the room changes something. It changes the very nature of the company. I mean, we didn't have this index 10 years ago, but we've been able to improve ourselves each year that we've been on the index, because we look at it and we think of, okay, hold on, where did we not do as well? And we try to improve it.
I mean, I think that's what, what I have a problem sometimes is you hear people and you talk to people in companies, especially, I'm sure, people involved in the index, and they're all doing fantastic things. You've just talked about your small business programs, and yet, as Dina pointed out, the sort of macro numbers are still so weak. And we were hearing earlier about how we've kind of got stuck in some of these numbers. I mean, is it the case, Dina, that we still need to have a push because you've got leaders in the industry who are pushing this, but actually the majority of the landscape still not changed?
I definitely think there has to continue to be a push. Yesterday, Redshirt Edelman put out the Trust Index, and every year you see different sectors, I won't say which, where the public is losing trust. And interestingly, the private sector business is on the rise. And I have a theory about that, which is that just as Ann and Peter spoke about, companies have really been saying it's not just about profitability. I mean, obviously for our shareholders, that's critical, but it's so much more than that now. We have to be asking, what can we do as major global institutions to really drive change? And it's interesting, at Goldman Sachs, 60% of the population is a millennial. So 60% of everyone at Goldman is under the age of 30. And they really demand these kinds of initiatives. And, I think each company, and frankly, working together as well, really have been able to say it's not just PR. We really need to use these resources to help change and transform people's lives around the world. And so I think you're going to begin to see leaders really taking this on much more aggressively, whether it's in diversity or other issues too.
Peter.
So we are, as many of the people in the room know, different. And in the context of the higher purpose at Bloomberg is first to bring transparency to the markets, and I won't go through the whole spiel. But the second is 85 cents of every dollar of value we create for Mike, Bloomberg, who owns 85% of the company, will basically go to his foundation, as Dina and Ann and Stephanie know. And he is basically has a team of people focused on 6 different areas, making major transformational gifts on an annual basis. In 2018, he will have given away about, just in 2018, because of a big gift to Johns Hopkins, about $2.5 billion. Every time he makes a gift to any organization, we send around a message from him to all 21,000 employees, basically saying, you should know that I have just done the following. I just wanted to tell you how much I appreciate what you do, because I can't do it without you. It is a hugely powerful recruiting tool for millennials. It is transformational for the people who come to work every day. I've been in a leadership position at Bloomberg for 17 years. I still, believe it or not, when I get out of bed in the morning, have that energy knowing that we are going to make such a difference to so many people around the world. And it really counts. And to the extent we can kind of take a portion of that model and reimpose that over the public sector and really do some of the things that Goldman's doing and B of A are doing and other institutions are doing, that I think is the responsibility of leadership today, to find that balance between shareholders and stakeholders and make sure that we are really being transformational and playing the role in communities that we have the responsibility and I think the obligation to play. Sorry, I get a little crusading.
As someone who's only recently joined Bloomberg as a manager, I also find it a very useful tool when you're going through expenses, that you can tell people, you know, you went to that slightly more expensive hotel, that's money actually out of the foundation. I'm just saying. It could have gone to a good cause. And I find people are a bit more disciplined than when it's just coming out of some random pot. I might stick with you briefly, Peter, because I know you wanted to talk a little bit about inside the company. You know, we've talked about a lot of grand schemes, and we might go back to talking a little bit about the Sustainable Development Goals and how it fits in with that. But, you know, as a company, when it comes to your kind of mental health initiatives and well-being, you know, how are you addressing that?
I gave a keynote address to a small group of people in London in December, and it was on behalf of something called Time to Change, which is all about mental health in the workplace. And it was really, from my point of view, from my personal point of view, one of those eureka moments when I kind of said to myself, I just can't imagine that we haven't been being very active in this area for a long time. As many of you may know, 1 out of every 5 people, there are probably 100 to 120 people in here, there are probably 20 or 25 people who suffer from some form of mental health problem, whether it's bipolarity, whether it's depression, whether it's substance abuse, or whatever it may be. And I don't think we as a company, for example, have been nearly as proactive as we are now and will continue to be as we go forward to help our colleagues get through these issues. When it was announced that I was going to give this keynote speech, I got a long message from a long-standing colleague who'd been with us for over 25 years. And basically, I met with him in London when I was there the next time, which was a couple of weeks later. And I was deeply touched by his comments about what we as a firm had done to help him cope with these problems. And I think it's kind of the next wave, not necessarily the next in sequence, but probably simultaneously, along with diversity and inclusion, that again, we as leaders have an obligation to do the best job we can, create the best work environment so our colleagues can bring their real selves to work every single day. And mental health is certainly an area that we're doing. We've now done kind of a kickoff speech in the United States with our diversity and inclusion leader and some outside speakers. And it's something that we will slowly, like D&I, become much more proactive about and hopefully helpful to those colleagues that are suffering.
I mean, I find it interesting because I think, although we kind of think of them in different categories, it does strike me, and Anne's talking about, you know, how a company can subtly change when there's more diversity in the room. I wonder whether the conversations that you start having internally about managing workplace stress or work-life balance perhaps triggered by trying to keep women in the workforce through their childbearing years, are then conversations that are actually helpful for everybody in the company, not just women. Do you find that, Dina?
Definitely, and I really want to commend Peter and Bloomberg for focusing on this issue. I mean, it's unbelievable that it hasn't gotten enough attention. And yes, we're very focused on, work-life balance and some sense of sanity. But I do have to say, whenever I do speak to our new analysts and associates, I remind them that people like Ann and I had to pay our dues and work really hard. So it doesn't mean don't work really hard. But I think it's vital now, to deal with those issues. And, one of the things that I find as you talk about it is that the shame of it goes away. And so more and more colleagues are really coming out and saying, I need some flexibility, or I'm dealing with these issues. And I do think it's really important. You mentioned the Sustainable Development Goals. If we look at the very lofty and critical goals, so many of them are focused on women and girls, rightly so. And we've often talked about that issue as a human rights issue, which of course it is, a justice issue, which it is, but now it's smart economics. And so I think as we talk internally, it really is just the best investment you can make if you care about global development, if you care about income inequality. But I actually think these issues are also starting to be just a smart investment that you can make to have a more productive, healthy, workplace.
But I mean, the SDGs are, the ultimate data-driven program, and it was trying to put to work that idea that if you have some animating targets and some numbers to go with it, you can really force change. And I think it have achieved a lot. But the pace of change has obviously not been necessarily what we want. And I mean, do you think, how far do we still have to go on some of those crucial SDG targets, particularly involving women?
Oh, there's a huge gap. But the fact is that when you have more women in your workplace, when you have better benefits, like dealing with mental health, better maternity, paternity, better elder care, better flexible hours, better training, all of those things are part of what needs to happen, and they are happening. When you're looking at the Sustainable Development Goals, I think you start to look at them in practical ways, that we're just on the environment, not just are we, in the case of financial services, lending more, financing more, but are we making sure our own buildings are carbon neutral, that we're putting more solar in, that we're building LEED buildings. And when you have as many millennials as we all have, because the most successful companies have a lot of millennials in them, they expect this. This is table stakes. When you have more diversity, I think there's greater conversation. When you set goals, then you have to meet them, and you're not just assessing them for yourself, but you're being assessed. I mean, there are half a dozen or dozen third parties that are evaluating us, MSCI, SASB, GDP, except, so there are a lot of, GRI, sorry, there are a lot of third parties. We're doing it for ourselves. Most senior managers and companies are being evaluated, as Dina said, for how are we doing on diversity, how are we doing on the environment. This isn't just nice to do. We are evaluated for this. And with all of that, I think the trajectory, I mean, there's a long way to go, but the amount of movement that's happened in the last 10 years is enormous.
Do you think there's enough clarity about, I mean, are we almost getting too many? I mean, Peter identified there was a hole in the market in particular for the gender equality index, but we have a plethora of ESG measures and investors talking about lots of different indicators. Do you think we need a bit more clarity on this?
Yeah, I do think we do, but we do know this. We know the companies that by any measure you want to, I mean, if you have one index and another, they're not going to be that different in terms of evaluating a company. For the companies themselves, it's a lot of work, and hopefully at someday we will not have a dozen, we'll have one or two. And then the second thing is not only being evaluated for the kind of company you are, but what is the output? What have you been able to do in terms of more women, greater environmental progress, more clean water, because that isn't really measured as well. That also has to be measured. However, there's a fair amount of evidence. We have done 4 studies through our equity research, so that's separate from what we would do in my area. And they can prove definitively that those companies that apply ESG standards to their own company and the way they behave are less volatile, their earnings are more sustainable. So these kinds of things really make a difference, because now it's not just nice to do, it is a predictive model for what kind of company you're dealing with.
And of course, the area that we have had, and I started with it, but the area we've had the most kind of comprehensive data, certainly in the UK, people being forced to do it, was on the gender pay. And I just wondered, I mean, I asked Dina about it, you know, where do you think that sits when you get these kind of headline numbers, whether it's sitting with 29% or big numbers from other companies? Do you think that's entirely helpful, or is it sometimes a distraction?
Well, it's a distraction, but it's probably ultimately helpful. The thing in the UK that I'm not sure I fully agree with is it's taking all of the people and making a median, and that's hard to do. The first thing should be job to job. Everybody that has an same job should be getting equal pay, and that's critical. So the idea that you take an entire population and create some median, I don't know, what you'll get out of that is there are fewer women that are the CFOs and the CEOs, that's for sure, and that's good long term. But I think in terms of making sure that the people in your company have a true difference, you need to be looking at job to job.
Mm. I think it's just that you end up somewhere in between. You either have the gap disappear entirely because you're always able to explain it in terms of that extra 6 months experience or whatever it is, or be very large and in that sense kind of unfair on the company. Yeah,
the extra 6 months or so. I mean, I would say that this job-to-job analysis that's being done, that most companies are doing now, that's an eye-opener. You'd be surprised how quickly things get equaled out.
Mm. Though it can be expensive. I think in the case of many
I'd say
companies,
it's worth
it ends up people only go up, they don't go down. So it can be expensive. I mean, and transparency, I guess, again, it's one of those things. It's a double-edged thing that it reveals the problems you have, but it also gives you some kind of way to animate action. I guess finally, I'm interested in, as someone who came to Bloomberg from JP Morgan, where we have Mary Edwards managing a lot of money there. More women managing money, even if they're getting a very small proportion of venture capital within some of the big firms. Right. Women playing a bigger role. Do you think in 10 years' time you will actually see a difference in investment behavior from that?
I think we would hope to. Most of our investment over the past 12 years was really in emerging markets, as I was describing. And little did we realize that it's the developed economies that really need the push when it comes to women managing assets, women getting capital, as I said. We're very proud. Our head of International Global Asset Management, Sheila Patel, is on the management committee. And I would say she definitely looks at things from a different lens. And you would hope that as women fund managers do access more capital, you'll see a difference in the kinds of companies that they're investing in. And frankly, bringing along more women. I mean, it does seem to be the last frontier. I mean, we're making small strides in lots of places, but asset management and funds, really, it's a striking thing and something that I think, if invested in well, will make a huge difference.
Mm. I mean, Anne, do you see the sort of disconnect? It is interesting if you feel if there's been faster progress in emerging markets than there have been. The developed economies is still a sort of hard nut to crack, or that key bit of the investment industry.
Well, right, because it was a more mature market, so you're just getting to it. You're trying to do a redo rather than a start to a finish. But I think it will matter, and we see more women in asset management. I think these lenses of ESG and sustainable development goals and the role corporations are playing in the greater world dialogue is actually what's going to make a difference. Now, you need more women at the table. You need more people of color at the table. You need greater people of disability. You need more diversity in general. But I actually think the lens is these metrics that we will all seek to meet and exceed. And the fact that there's an opportunity out there, they're talking about $12 trillion worth of opportunity just if we could address some of these SDGs in a more productive way, in the way that we would other opportunities. So I think that it's not just about gender here.
Well, I'm interested you say that, because I think there's one area that we perhaps don't talk about enough, although it's something that's increasingly being talked about inside Bloomberg. Is I've certainly been struck working in lots of different institutions is we can focus on gender diversity and actually racial diversity, and maybe not enough on social diversity. When you talk about having different voices in the room for a decision, you can have multicolored, multi-gender, but if everyone has been to the same schools and has completely the same mindset, I mean, just from a media example was when you had the awful fire in the Tower block in the UK, in London. Now, this is a tower block that is minutes away from where all these BBC and Bloomberg employees, other people lived, and yet no one had ever set foot in that tower. They knew nothing about the community that was in there, and it was just on their doorstep, let alone other parts of the country or the people who elected Donald Trump or anything. I think you can be blindsided by developments in the economy or in society by having that narrow view. Do you think we're focused enough on the social diversity of people coming into our companies?
Well, I probably, because we are such a big company and we have consumer and small business, we're in the community. We have tellers and data entry. I mean, there's a lot of diversity economically in the company too. The first thing is to make sure your own people are paid a fair minimum wage, good health care, good benefits. I mean, that's our first commitment, all of us. And then from there, making sure their voices are heard. I think their voices are heard. We have an ESG committee, which is made up of people throughout the company that talk about everything from gun control to the environment, and the voices are different.
Do you find that, or Peter?
No, I would say I think that, and it's a little bit Mike's personality and the culture of the organization, I think Bloomberg's a pretty eclectic place. We'll hire in 2019 about 5,000 new employees, and a significant portion of them will be engineers, and engineers come from highly diverse backgrounds, certainly from an ethnicity point of view and also from a geographic perspective. Lots of operations type people, and so I think that social mix I think is quite good, and probably something that needs a little less attention than what we're doing with women and other underrepresented groups.
I think that's true. I mean, there's certainly more focus inside Bloomberg than many places that I've been. Well, it's been fantastic. I think we've demonstrated that the conversation around these topics is very different from it might have been even just a few years ago, and the data with the GI and everything else. So thank you very much to all of you for joining us.
Thank you.
Thank you.